Hello and welcome. This video is the continuation of the training that I shared earlier on break-even analysis. So if you haven't seen that video yet, I would encourage you to take a look on that video because it has very important and critical pieces that would help you better understand the context of this current video. So we have been talking about break-even analysis, and if you remember from the prior video, I talked a little bit about the three components of break-even analysis. So you have the revenues, variable cost, and fixed costs. So this helps you understand at what point your business is either losing money or making money. What is that point where revenue equal to profit equal to fixed cost plus variable costs? So that's kind of where you want to pay attention to, because as a small business or as a self-employed individual, very often people fail to realize that if they don't have enough cash to cover some of the costs that will be with the business, whether or not they sell anything, they will be at a greater risk to close the business, as I had shared with the story with the lady in Charleston. So as a case scenario analysis, we're gonna look into let's use an example of a restaurant that only sells three products, right? It sells pizza, it sells hot dogs, and it sells let's say what else can we add there? Burgers. Okay, awesome. So this restaurant sells these three products, and based on the market analysis, again, all these data have to come from the market research, from a very meticulous study of the market, understanding what other clients or competitors, excuse me, are doing, what is their average number of clients per day or per month even, or at the annual basis, and how much they charge per product. Okay, so let's say each person, based on our market studies, our research, the average price of a pizza is $12. The average price of hot dogs is $7, and the average price of a burger is about, let's say, $15. Okay, and we are expecting to sell per month around 500 pizzas and 700 hot dogs and 1,000 burgers, and our estimated total revenue is around 310,000. So that's our revenue side of the equation, right? That's based on our analysis again. And if you don't know how to do the market study, our firm, Yeto Accounting and Tax, does a great job with market studies, market analysis, industry studies to help small businesses and entrepreneurs get a better sense of what they're getting themselves into. So we also do advising in this space to help entrepreneurs from the idea to launch of the business, or even far after that. So that's the revenue side. Let's look into the variable cost. All right. So let's say you are paying each employee $10 an hour, and you have about 10 employees in your business, and let's just drag that across, and the average cost of material, let's just put the average, let's not break down the material like ketchups, bread or buns or sausage, whatever else. Let's just use an average of all that. Let's say the average cost for that is about okay, let's actually reduce the labor cost to $5 and the material cost to $2 and the overhead to $1. Of course, the overhead assigned to the production of each one of these goods, it's a little bit more of complicated than what we are doing here, and it's much more nuanced than what we're doing here. All right, so and then we can do the same thing for the other product, right? So let's actually bring that information from here so that it actually reflects exactly the same thing. Okay, so the hot dogs, $1 and $1 assigned to it. Let's do 50 cents. And then for the burger, we have 2.5 here, and we have about 1.5 for the overhead cost. So the average cost to produce to sell each one of these products is below here. And then when we go to the fixed cost column, so again, the variable cost, they change based on the quantity you sell, but the fixed cost, they do not sell. They remain constant, whether you sell one burger or you sell 1,000 burger or 10,000 burgers. So let's just, for simplicity, keep these numbers as they are. And based on this information, our income statement is developed. All right, so we have our income statement here, the total revenue, and then we have the estimated variable cost, and then based on that we have our gross profit. From there we have our estimated fixed costs and then net operating income. So there is an about 20.50% in net operating income profit. So for every burger we sell, we're making $20 on it. So where does the break-even analysis come in? So everything is fitting from there, and we have everything pulling very nice and neat. And from there we have the break-even result. So this is where I want you to pay attention, because everything else just flows directly and nicely from the other three tabs: revenue, variable cost, and fixed cost. But also, let's even take a step back before looking into the result to look into the gross profit, right? So just by looking into the gross profit, we can see which product is actually performing well and we should be investing a little bit money on. So for example, product A, we know it's based on our case scenario here. Product A is pizza, product B is hot dog, and product C is burger. So we know based on these, so let's just bring it from the other screen. That way everything looks uniform. Give me a second here just to unify everything, and we're gonna get going. Okay, so ready, awesome. So based on these, we can see that the burgers are producing greater profit than any other product we have here, and hot dogs are producing the least profit into the business. So if you were making a decision in terms of, okay, what product we can invest more time or we should maybe remove from our menu, this can be a really good starting point to help you assess where to put an additional money to continue support your business, right? So that's really important. And then the reason of our training is to understand the break-even point. So how much you will need to sell as a small restaurant to just to barely be able to buy the product from suppliers and sell and make the burgers, the hot dogs and pizza, and cover your fixed expense and not make any money whatsoever. All right, so that's the point where we have to be. So this should be in dollar. Right, so you need to sell at least 95,000 or approximately 100K before you start losing or making money. And you need to sell at least 245 units per month and 2,940 units, a combination of all these per month before you start breaking even. So based on this, the break-even analysis is such a powerful tool because it shows you where are the products that are doing good, well or not doing well, and based on that you can decide what to do about it. It tells you how many units you need to sell before you start losing or making money, or how much dollar amount you need to sell per year or per month before you start making any money or whatsoever. So these the bottom line, or where I'm going with this is, as a small business owner, you really have to seriously sit and pay attention to this, because this can help you develop a strategy to cover your expenses as time goes. Because one of the biggest problems small businesses have is the shortage of cash. They run out of cash. That's one of the biggest problems that really can take a small business out of business, just like that, really fast. So you want to know this, that way you will develop a cash management system that allows you to be able to survive, especially in times like these during the pandemic. How much cash do I need per month? The break-even analysis can be a starting point for you. So do not ignore it. Do not take it for granted. And this is, again, a very simplified approach to kind of get an idea of the break-even analysis. If you need help, if you need a professional to help you think through this, we're here to help you. Call us, give us a call, text our WhatsApp number, our social media accounts, go to our website, whatever works for you. And if you already have an accountant, an advisor that you've been working with for a long time, reach out to them and see if they can help you figure out a little bit of this kind of situation, right? So I hope this was valuable to you and it helped you figure out a little bit more about break-even analysis. Again, I appreciate you taking time to connecting with us tonight, and I am excited to be able to help some of you who continuously support and continue to follow us on social media. This is our website, tietoadvisory.com. And before I go, I want to leave this information out there. I got my COVID-19 vaccine today, and I want you, if you haven't done yet, please go out there and get your vaccine, get vaccinated. Help us save lives. When you get that COVID-19 vaccine, you are preventing the disease to continue spreading, right? So let's all of us do our parts and make our city of Chicago amazing, in the place where people, small businesses, families can strive. All right, I hope to connect with you soon and have an amazing rest of your day, and we're here to help you strive throughout these challenging times.